What is up guys, Taiki here and welcome to the State of DeFi and NFTs report for January 2023. Link to the premium Discord in the description below. So 2023 has been a pretty good year for crypto. It's actually been basically up only, right? At least for the majors. Bitcoin up like almost 25%, same with Ether, and the liquid staking derivative tokens that I've talked about in last month's video, they're all up 2x, which definitely caught me by surprise. So I'll talk about, I guess, the dangers of these, really hot narratives when we get to that section. But this is the agenda. Timestamps are in the description below in case you want to skip through some sections. Of course, none of this is financial advice. I am a bag holder, right? I no longer feel pain when I lose money. And these are my thoughts as of January 19th. And I still hold these tokens. And yeah, I'm a longer term holder for these tokens. So let's talk about the majors real quick. I don't really do TA or I don't really participate in short-term trading. But I guess back in June of 2022, right, post 3AC, I thought that was the bottom. Of course, I was wrong for Bitcoin because post FTX, Bitcoin put in a lower low. But Ether is holding its June 2022 lows. So I guess maybe I'm like 50% right or something. Like my view on the majors is that post 3AC, I just think that 20k Bitcoin, like $1,000 Ether, like how are they not attractive holds at this point? So I mean, like at least for my portfolio, like roughly 40% of my crypto portfolio is in these LP tokens, right? That contain Bitcoin and Ether, namely TriCrypto and GOP, which I'll talk about later. Just because if you look at this overall longer term trend, whenever Bitcoin and Ether, right, hit these RSI levels of 30, right, these oversold conditions, sure, there was like short-term volatility, right? I mean, in 2015, we saw a lower low later in 2015, but we anyone that bought back then, right, were able to reap the benefits. Same for 2018, 2019. Of course, we had like the crazy pump in 2019, followed by the COVID crash. But like we saw like the bull market right after, and even in this case, right, if you bought Bitcoin in June, you saw lower lows in November, but we're basically back to those levels, if not higher. And same goes for Ether. Of course, there's like less data points because it's a younger asset, but whenever we get to these levels, it's just like generally a good place to buy, don't you think? And for me, I personally like to hold these LP tokens because post FTX, it's really hard to not want to buy, right? And I generally my prediction, right, post FTX was that GOP and TriCrypto can be thought of as like a crypto savings account, and I think these tokens will outperform cash in 2023 as well, right? Even with the most recent pump. Of course, these LP tokens at risk, right? TriCrypto, it pays like 14%, and I guess there's smart contract risk, and GOP also has smart contract risk on top of, I guess, a trader P&L risk. But I think it's generally a good way to gain blue chip exposure. And maybe some people, ask questions like, hey, if you're super bullish on Ether, then why don't you put your entire portfolio into Ether? But if you think about psychology, right? Just hypothetically, right? It's talking about extremes. Would you feel more comfortable putting 100% of your portfolio into Ether, or would you rather feel more comfortable putting 100% of your crypto portfolio into TriCrypto, right? An LP token that pays yield and swap fees. So generally, my strategy, right, is to make these LP tokens my core positions and use the yield that I accumulate from these fees to slowly accumulate things that I'm more interested in. And of course, I still hold cash and whatnot, which I can use to play narratives or buy tokens I like on dips. But that's generally been my strategy. Of course, TriCrypto on mainnet. Convex pays 14%. If you go to Arbitrum, right, if you click this button, last time I checked, it pays 18%. TriCrypto really isn't a sexy or cool position, right? No one's gonna applaud you for buying TriCrypto, right? No one's gonna be oh my god, you're the best trader ever. But I still think it's a pretty decent position, and generally I think it's better than just holding cash, for most people. And these are my these were the yields for GOP last week. 56% on Avalanche, which I'm very happy about, and 35% on Arbitrum. Very good. This week it's 35% on AVAX, 31% on Arbitrum. But even this were to be cut in half, it would still be pretty attractive. And I'm investing my GMX, earning the yield, and with the Avalanche I'm earning, right? Avalanche recently went up almost 2x, right? So what did I do? I dumped it, right? I dumped it to accumulate more tokens that I'm interested in. The benefits of these LP tokens is that it provides you volatility muted exposure to the majors, right? Notably Bitcoin and Ether. The yields may or may not be attractive for some of you. And it also allows me to hedge against a Bitcoin dominance run. As much as I'm bullish, like super bullish on the macro, right? For the ETH BTC ratio, right? I expect Ether to outperform Bitcoin, let's say in the next 12 to 24 months. Like no one should be surprised if Bitcoin dominance goes up to 50, 55%. And, you know, of course, sometimes I put myself in this echo chamber because, you know, I usually only interact with people in DeFi. But, you know, I got into crypto because of Bitcoin. I still love Bitcoin and I still want to hold exposure, even though I'm like more bullish Ether. And it also allows me to hedge against my stupidity. If I hold these LP tokens as my core positions, then, you know, it means that I can't like, you know, take these funds and like, you know, throw it away and like, you know, burn money trading NFTs or altcoins, right? At least if I make these my core positions, I can expect it to grow over time and I can use the yield to do whatever I want. You know, of course, it kind of depends on your personality, kind of depends your outlook on altcoins, Bitcoin, Ether, and how much money you have in crypto relative to other asset classes. But this is generally my thought. And I think most people, right, they're better off like holding track crypto than trying to, you know, flip LSD tokens and whatnot. And generally, I think, you know, 12 months from now, right, if you think about like what would people in 2024 be saying about the year 2023, I think those people, right, a year from now will be viewing 2023 as generally an accumulation year where it's going to have lots of volatility. It's going to go up, it's going to go down. A bunch of people are going to get wrecked trying to trade these things. And that's also like the benefit of these LP tokens, right? With TriCrypto, you clip the transaction fees, right? And GLP, you collect trader P&L. So, you know, on any given day, any given week, any given month, something can pump a lot because of like whatever hot narrative, or something can dump a lot because of FUD, right? But if you ignore the short-term noise, have a longer-term time horizon, I think generally people will be fine, and just have a strategy that you're comfortable with and just be patient with it, right? Just stick with it. The worst thing you can do is to sell your high conviction bags to chase I don't know, like pumps, right, and hot narratives, and, you know, like lose out on money that way. I think a lot of people are better off not trading, especially, you know, on-chain activity, right? Gas is starting to pick up. There's MEV. You have to pay like 0.3% swap fees to these dexes. You have to pay slippage. You know, like I think most people are like better off like just accumulating things and like sticking to it and taking profits along the way. In terms of like lagging indicators, right? Maybe some people think that we haven't seen capitulation, but, you know, I think post 3AC and like, you know, all the lenders blowing up, you know, FTX, right, rugging people. I think, you know, there has been capitulation both like financially and also emotionally. Of course, I can't really prove it. I guess like on the financial side, because there could be like more, you know, big players that, you know, are going to be forced sellers of assets, but I think like the majority of them have come and gone. But I mean, I can't really speak for other YouTube channels, right? And my channel is primarily focused on DeFi, so I think, you know, the subscriber count gives a pretty good I guess sentiment check on how people think about DeFi. And if you think about it, like ever since May, right, which is like the Luna crash, like I've just been losing subscribers every single day. And this just means that, you know, people see, or like my former subscribers see my video on the timeline. They're like, I hate crypto, I hate DeFi, it's all a scam. I'm gonna unsubscribe from this scammer, grifter, right? Or like whatever, right? Like however you want to justify it. And I don't really expect this to turn around until, you know, Bitcoin and Ether prices are like, you know, 30K and like 2K, because I don't really expect new people to tune back in until prices are much higher. But maybe like once this turns back, you know, that can be some signal, right, that retail is more interested, and maybe that can be the beginning of a lag, right, or the beginning of like the next you know, bull cycle. Or if you're like more cynical, right, maybe that's like the local top. So that's kind of interesting. And, you know, this isn't updated for like the last 10 days, but, you know, generally stablecoins are leaving the ecosystem. I'm not sure if you can read this, but, you know, these are for the major stablecoins, right? The centralized stablecoins, USDC, USDT, and BUSD. And almost every single day, every single week, stablecoins are leaving the ecosystem. And if money is leaving the ecosystem, that just means that there is less money to be extracted in terms of capital gains. So it's a really PvP environment. Of course, these are lagging indicators, right? by the time stablecoin inflows are picking up, by the time subscribers are really picking up, then chances are prices are much higher, right? But maybe you're risk averse and you don't mind buying higher until you see like stablecoin inflows or something. I think it's more important to look at leading indicators because looking at lagging indicators, it doesn't really give you like a good view on like what's actually happening on chain. So leading indicators will be things like on-chain activity, right? So Ethereum mainnet gas fees, I think that's really interesting. Older projects pumping on catalysts. So what I mean by this is that I don't think it's enough for new projects to launch and pump. I think in order for you to see a more sustained bull market, you need to see like these older projects such as Uniswap, Aave, FXS, Lido, all of them like trying to, I guess, outperform Ether altogether, because generally that means that sentiment in DeFi is improved. And if we're in that environment when like Uniswap is outperforming Ether, then chances are, right, on-chain is better, there are stablecoin inflows, and there's more demand to use DeFi, and people are looking to buy certain governance tokens. I know governance tokens has a really, really poor narrative, right, for good reason. But I do think that there will be a point sometime in the future that they become attractive buys. Also, Bitcoin and Ether dominance. I don't think these dominance rating or like these indicators have that much value, given how mature the crypto asset class is. I mean, maybe it's not as mature as I think, but I don't think Bitcoin dominance like matters too much. But there are a bunch of people that still look at it. So if Bitcoin dominance goes to 50-55%, then I think generally the market is going to feel more comfortable allocating to altcoins because typically in the past, Bitcoin has led us out of the bear market. I think this time around, given the emergence of DeFi and NFTs, I think Ether can actually lead us out of the bear market, and maybe Ether dominance can outperform Bitcoin dominance, and that can actually be a sign that confidence is returning to the markets. So what kind of things can actually lead to a resurgence in DeFi? I think something as simple as Ondo Finance. So they're trying to bring risk-free yields on chain. I talked about this in my last video, but you can't if you can go to Fidelity and clip 4.5% or like 5% risk-free yields, then there's less reasons for people to bridge stablecoins on chain to lend it out on Aave to earn like 2%, right? It makes no sense. So if these risk-free yields can be brought on chain, that can definitely lead to more stablecoin demand. Therefore more stablecoin inflows. And I think the beauty of this product, right, that Ondo is bringing, is that it can actually allow permissionless exposure to short-term risk-free US yields. So how this works is whoever wants to open these vaults, it has to be KYC AML'd, but anyone can lend out stablecoins to these larger players that's going to be deploying these stablecoins into US treasuries. So I guess like the beauty of DeFi, right, that we all kind of dream about is financial access, like financial freedom, being able to have control over your money, and think about people in other like countries, right, that don't have, I guess, the dollar as the reserve currency, and if their currency is depreciating value against the dollar, then maybe there's going to be more demand for people to convert their native currencies into USDC, bring it on chain, put it into these short-term US government bond funds, and I guess like have better control of their wealth that way. So this isn't really exciting, right? Like no one's gonna make YouTube videos about like Ondo Finance 5% risk-free yield. I mean, I guess I am, right? But it's not like a dedicated video to this. But I think these products is ultimately what is going to lead to like the next DeFi bull run, where it's not just like US people that use DeFi, but it's going to be people around the world using Ethereum as a whole, and leading to some like financial revolution or like whatever, right? Some evangelized version of the next DeFi bull market. In terms of like on-chain gas fees, I believe this is like January 1st. So ever since the calendar turned, I guess people are rebalancing or something. And NFTs have also popped off. But there seems to be I mean, it's not, you can't really do TA, but maybe some level of higher highs and higher lows in terms of Ethereum gas fees. And the fact that Ethereum is already deflationary when there's not many things to do on chain, I think that's something to be optimistic about, because if on-chain activity does come back, then that's going to create some reflexive cycle around ETH, the asset, right? The narrative, ETH as ultrasound money, and like Ether having like some monetary premium, flipping Bitcoin, etc. And I also don't think it's I'm not sure if you can like use TA on like stablecoin dominance, right? But despite all the FUD we've seen, the stablecoin market cap and like relative to the entire market cap, it really couldn't surpass that of summer 2022 lows. And that just means that, like most people, right, hold a healthy amount of stablecoins, and maybe that's healthy, right? You kind of want to see that, people to, I guess, risk manage and whatnot. But, it generally means that, people are still scared. And if the markets do turn around, there has to be some incremental buyers that come into the market. And especially, like sentiment can really change on a dime. This is from Crypto Kaleo's Twitter account, but I remember back in July of 2021, sentiment was really, really bad, right? Like everyone was saying it's over, and I guess we did end up putting lower lows in 2022, but it really didn't stop us from putting in this crazy run in Ether, right? I guess like this double top cycle, and NFTs. I'll talk about NFTs later, but I actually think that there's a pretty good case to be made for people to be bullish NFTs, but I'll save that section for later. The point is, I think we've all been conditioned in the past 13 months to just fade all rallies, because every time you get excited about prices going up, like we just get disappointed over and over again, and fade the rally, like short, whatever. But at some point that strategy is not going to work. At some point there will be a trend shift. And I think, the recent strength in the price of BTC and Ether allows me to become more optimistic about the future of the markets. I think ultimately, right, like if you go on social media, right, there's like people like, like trading actively, trying to call tops and call bottoms and whatnot. But ultimately, like, these short-term traders, like they don't really drive the markets, right? People that drive the markets are longer-term accumulators that have much higher profit targets. I try to think that I'm one of those people. For example, like, right, like if I'm like buying Try Crypto and GLP post FTX, and even before FTX, I'm not like my profit target isn't like 25k Bitcoin, right, or 2k Ether, right? Like my profit targets for the majors are much higher. I have a much longer time horizon on this stuff. And maybe that's like not the best strategy for 2023, right? Maybe it's better if you're like more nimble, you like, long, you short, whatever. But, I'm trying to be humble, and like I don't pretend like I'm a good trader. So I stick to these yield bearing strategies where I can use the yield to accumulate things. Enough about that, right? Let's talk about the LSD Narrative. I'm sure that more people will want me to talk about this stuff. And it's pretty crazy. Like I said earlier, everything is up 2x, which really caught me by surprise. And I guess, it's a sign, it kind of shows you that narratives can start at any given time a lot earlier than you expect. Like legit, right? Like I recorded that video last month, and I was like, yeah, like in my mind, I was like, okay, I'm going to buy Lido and StakeWise throughout January, right? I'm going to just, DCA into it and establish a position. But, after everything is up 2x, right? Like what do I do? I just want to briefly talk about narratives. I'm not going to talk too much about like the prices. I just want to help you think more about how these narratives form, and like the dangers of these narratives, and really how much upside is there left in this type of narrative. Because if you think about narratives, it's a story, right? And in such a speculative asset class as crypto, people buy things when the story is good, and they can justify to themselves that, hey, wow, like that's a really good story. I'm going to buy that token, right? I'm going to buy X because Y is going to happen. And oh my God, if Y happens, there's so much upside. I'm going to buy that token, and then I'm going to tell everyone else to buy my token, right? That's kind of generally how it works. Of course, some narratives are sustainable, some are not. And if you're like more longer term aligned, it's best to try to separate or try to bucket some things. It's not bad to play these narratives, but just understand that, these are narratives. And if these narratives are not backed by the fundamentals, it really doesn't have any staying power. Of course, going back to last month's video, there are fundamental catalysts that drive these narratives. However, let's talk about, I guess, the concerns I have for this narrative. Because the story is definitely a good one, right? This ETH staking rate is like roughly 14%, and I think it's reasonable to expect it to get to 60 to 80% by the end of 2024. I said in my last video by the end of 2023, but I think I'm wrong on that. I think it's gonna take a lot longer for it to get there. But I guess the narrative was correct, right? But the speed and magnitude caught me by surprise, and like I mentioned, I only hold FXS, which I bought I believe June or July of last year, and I don't hold any Lido or StakeWise. So let's talk about the concerns I have about the risk reward of the LSD narrative, right? And maybe you can make a better decision if you hold these tokens or if you don't hold these tokens. One of the concerns I have is that nothing has really changed in the fundamentals of Lido Rocket Pool Stakewise from December 31st to now. Because if you think about, I'll talk about the Lido chart later, but Lido started pumping January 1st, right? And maybe it's because people watch my video and people follow DJ Spartan, right? And I guess people like caught on, or like I have no idea, but it's not like Lido, like the price doubled, but it's not like the amount of staking or the ETH staked in Lido has doubled since then, right? It's just that everyone just all of a sudden agreed that this is a good token, and then everyone bought the token. And the most dangerous types of narrative, right, that you will see on social media is when the price leads the narrative. It's like you don't want to buy into something that's already consensus, like after price has already went up, right? It's like, because what I see like online on Twitter is like, like everything goes up 2x, and then everyone is like, okay, like this is the upcoming LSD narrative that's gonna make you a lot of money, right? Check out these 10 tokens that I own, right, to make money on this upcoming bull run. I feel like that's generally like the sentiment that I've been reading online, and of course I'm talking, I guess, like my bags, right? But I think FXS can be bucketed differently, because when I bought FXS, it's not really because I bought it for liquid staking derivative. I bet on FXS because it's a bet on Sam, right? Sam Kazemi and the team executing on the roadmap, and obviously ETH supply has gone vertical, and the beauty of I guess the flywheel is that as Curve and as CVX and FXS price goes up, it makes staking with Frax a lot more attractive, because you can earn 11-ish% staking your ETH, right, providing liquidity on Curve. And as more and more people provide liquidity, it's going to boost the staking rate for staked Frax ETH, because not all if you don't know how it works, then watch my last video, and I'm sure that you can like look up Frax like on Twitter or something. But it's a pretty good flywheel effect. Sorry, I don't know why I included this. Let's skip that section. But generally, like my bet on FXS is, like my mental model is like, I expect DeFi to grow, right, in terms of TVL, like 10, 20x, 30x over the next couple of years, right? I don't really have a timeline. It's really hard to predict these things, but I expect DeFi to have product market fit and attract more capital later down the line. And if we live in a world where DeFi TVL goes up, let's say like 25x, then I would bet that Frax and FXS is going to be a big part of that. So I didn't really buy FXS at like $5 to sell at $10, right? Like I have much higher ambitions for it, and generally when it comes to narratives, I'd rather align myself with holder bases that are much longer term aligned, because then I'm not really trying to play these PvP games. Of course, these short-term traders, are going to be like what drives prices up on any given day. But I think it's best to be a fundamentalist and not try to chase these narratives. Yeah, because so EDK, right? He says that betting on FXS is a bet on Frax to just be a leader in stablecoins and really bring real-world assets and have the entire team execute on their roadmap. I think the one thing I like about the Frax team is that they're really nimble, and they're able to pivot to like whatever market conditions that exist. Post Luna, right, the algo stablecoin narrative has really weakened, right? Therefore FXS went down like 95% or something, right? Or like 90%. But now they created Frax ETH, and that's like the growth narrative. So I'm really impressed by that. And I still like CVX, but I think it's going to be some while until bribes come back sustainably. So right now I'm farming, right, Curve, CVX, FXS. I'm dumping CRV, right? I'm farming and dumping CRV, but I'm like accumulating CVX and FXS, as a result. It's a flywheel, right? As these tokens go up, the yields on the Frax ETH LP on Curve and Convex becomes more attractive, boosting demand for Frax ETH. And if more ETH gets staked at Frax, or if more ETH it gets converted to Frax ETH, and if Frax ETH goes into the LP pool, then the staking rate for staked Frax ETH goes up. I know that's kind of confusing if you haven't followed Frax, but it's a good flywheel, right? It kind of drives these growth narratives. So let's talk about Lido, right? Sorry for like showing my bags, but I've held this thing for like 6 months and 7 months. So when it goes up, I'm allowed to be happy. So this is my conspiracy theory when it comes to Lido, and like I'm not really fully convinced on this, but I think there's pretty good reasons to think that this may be what's happening. And it's around positioning, okay? Because what really interests me with Lido is that it just started pumping January 1st. And, I don't really care about dates, but I think January 1st is a pretty significant date just because, 2022 has been such a bad year that I think there was a lot of tax loss harvest selling for individual investors, hedge funds, just VCs in general. And, my conspiracy that I have is what if, right? This is Lido chart, right? It's up ever since January 1st, it's up roughly, basically up 2x, right? And my conspiracy theory, right? And maybe this is just cope, right? Because I don't hold Lido, but what if, right? Following the merge pump, right? From 45 cents to almost $3. What if VCs just distributed all their Lido tokens, right? Because, why not, right? Just book those profits. And starting January 1st, they basically rebought all their tokens that they've sold in the past 6 months, right? In the Q3 and Q4. And this led to Lido going up in terms of price. And then the next leg of Lido going up and the short squeeze that followed was just driven by, retail FOMOing into the narrative and people getting short squeezed. What's the probability of this? I have no idea, right? But, I think it's it's not out of the possibility, right? It's definitely possible. Because despite what you might see on Twitter, right? It might make it seem like the Lido token has fully vested, right, for VCs and whatnot, but that's simply not true. Some of these VCs are on a different vesting schedule. For example, Paradigm Paradigm led the round for Lido, buying 70 million tokens May of 2021, and they have a 1 year cliff schedule, right? So they have their vesting schedule was following a 1 year cliff. Their tokens are vested linearly for 1 year. So starting in May of 2022, their Lido tokens have started to unlock, and they're going to fully unlock May of 2023, right? So these tokens are still vesting, and you can say the same for other VCs that participate in the round. And what's possible is that this pump was caused by just repositioning, and then this FOMO was caused by this retail. And now, we've seen FXS go up 2x, RPO go up 2x, StakeWise go up 2x. And, if you think about it that way, right, the probability is not zero. And even if there's a 20% chance that, this is what happened, it just makes the risk reward for, these tokens a lot less attractive. So that's my conspiracy theory. I'm not sure if that makes sense. But, I still think there's upside, right? The things I've talked about in December, it hasn't really changed. It's just that, if you asked me, right, when I recorded the last month's video, my expectations for price of Lido, I probably would have said, Lido would probably go from $1 to $3 to $4, right? And Lido is at $2, so of course there's upside. However, if you just think about the risk reward, right, just from a risk reward perspective, I can frame it as I think over 50% of the move in the Lido to ETH ratio in Q1 has already played out. So the LSD upside is still there, but I'm not sure if I can justify the risk reward buying this token right now, right? Because if you think about the level of retail and the amount of short-term traders in this, there's a lot of fast money in this. And what I mean by that is what percent of these token holders that has purchased this token in the past 2 weeks, what percent of them think that they just view Lido as a token to buy now and sell sometime in March, right, ahead of Shanghai? I think over 50% of the fast money just think that way. And if the holder base is if the psychology of the holder base is like that, then it's just going to be PvP naturally, and these people don't have strong hands to sustain even a strong uptrend, at least for FXS, right? The holder base is super strong. I mean of course I'm biased, but like I mentioned earlier, my profit target for FXS is not $10, right? I'm gonna hold this for the next I'm probably gonna hold FXS at least until I hit long-term capital gains, because I have a very long-term time horizon for this type of stuff. So I guess my lesson in the narrative is don't just look at price going up and assume that it's going to continue going up, right? A good narrative, it just can't be a good story. It also has to be backed by the fundamentals. And if the only fundamental for things going up is price going up, then that's not a good enough narrative for people to buy into. If you want to buy into something that's has like a sustainable run for at least 3 months, right? You need to have, like, you kind of need to align yourself with a strong holder base that isn't just showing these tokens because prices went up recently. And maybe I'm wrong, right? Maybe Lido continues to outperform, and that's still my base case. But I just think that there are like much more interesting opportunities out there than just like buying Lido right now. Will I buy on a pullback? Maybe, but I think the majority, the hype has already played out, over 50%. That doesn't mean that it's like 90%, right? I simply have no idea because these narratives can really go on forever. Or not forever, but like a long time. But that's generally my view. And I guess like the lesson in narrative, right? Like I mentioned earlier, like my plan was to like buy Lido and stake WISE in January, but like my plans were thwarted because it just like went up a lot. So I guess the lesson here is that like don't assume that you can time these narratives perfectly, right? Because it's pretty easy to like predict these narratives ahead of time, but it's pretty hard to execute, right? Because when it comes to investing and trading, there's like 2 levels to it. Part 1 is like the research, and part 2 is conviction in terms of like execution, right? Like buying, selling, whatever. And I'm generally good with like the research side, but I'm pretty bad with phase 2, or like part 2, right? The execution. So that's why I don't want people to copy trade me, right? And I just like want people to view me as like a research analyst, source, or like whatever. So generally, like in the year 2023, I don't really care about short-term noise in the price fluctuations. I'm just like, no. I'm like thinking about, okay, like what does the space look like in like Q3 of 2023, and how do I want to be positioned? And I'm just gonna slowly stack the tokens I like, try to position myself ahead of the narrative, and if it comes, then cool, right? I can take profits into the pump. Just be humble, stack good shit, and let the narratives come to you. Don't chase the narrative. Yeah, so those are my advice. And what am I accumulating? I'm accumulating GMX under $50. I mean, there's no special like sophisticated reason why it's like $50, but like that's just like what I think, right? I'm like farming and dumping, and if GMX is below 50, then sure, I'll like add into it. I want to accumulate ETH and try crypto GOP. I still want to accumulate XMON and NFTs, and I'll talk about that later in the video. So let's talk about GMX, and this is a thought experiment, right? GMX evaluation thought experiment. I don't really have like super strong conviction in this, but I just like wanted to help you think about how to value these crypto tokens. And I'll be talking about PE ratios. So of course, right? Like, I mean, I know this better than anyone, right? Like I used to be a narrative trader, I guess, or swing trader in 2021. And, I never used PE ratios. It makes no sense. So, historically, right? PE ratios, it makes no sense, right? Like we had these TradFi funds pivot to crypto funds, and they bought like SushiSwap because of the PE ratio. And it doesn't even make sense, right? And like they got wrecked. But I think over time, as the DeFi ecosystem matures and as the space matures, and as certain assets actually start to pay actual yield and dividends, I think at some point, right, the goal of DeFi is for these governance tokens to act like securities where it actually pays a yield and you can actually participate in the growth of the protocol. And with the risk-free yield being so high, I think people are going to have a much higher standard on what they are willing to spend their money in. So there's going to be a flight to quality where people will only buy things if it generates cash flow or if it has underlying growth metrics, and people are willing to buy into the token because they think it's undervalued, and maybe in a year or two they're going to start paying dividends, and it can have much higher valuations back then. And I think that PE models are going to start to work right in crypto, especially in DeFi 2023 and beyond. But I'll talk about like the benefits and I guess like the flaws of the PE ratio in crypto. If you go to gmxstats.com, this is like the like the market cap and like I guess like the PE ratio for GMX. So in the past month, right, in a bear market, the 30-day annualized PE ratio is 10 for GMX, which is still pretty good because the average PE ratio in the S&P is 25. Right now it's roughly 20. But of course you can't really use the average PE ratio for crypto because crypto is a high growth sector. Like if DeFi TVL grows 100x, then like some of these companies or some of these projects deserve a PE ratio of infinite or even 1,000. But it's like certain companies, certain projects, they deserve a low PE because they don't really have like exponential growth rates. They just generate steady cash flow, right? Like for example, like utility companies or like PG&D or Procter and Gamble, right? They have a low PE because they generate sustainable cash flow, but they don't really their growth rate is like relatively muted. Whereas for high growth tech stocks, their PE can be 100 or 200 or even infinite if they don't pay dividends. But people are willing to pay a high multiple for these companies, for these securities, because they expect the project to grow sometime later down the line. And if you think about the price of a stock, right, or just project in general, and you actually apply the PE ratio, prices go up for two reasons, right? Either the company grows their earnings, right? So if the PE is 15, so for example, right, if the PE is 10 for GMX, but the revenue, or the earnings of GMX goes up by a factor of 2x, then the price of GMX must get to $90 because PE is 10, right? Or another reason prices can go up is if the multiple goes up, right? If the PE ratio goes up. So if investors are willing to pay more for future earnings. Of course, in crypto, right, like PE ratios are kind of a meme, but I just think that it's going to become less of a meme, right? That's kind of like how I'm thinking about it. And this is important because if you were to buy an altcoin, you have to think about like, why would people buy this later down the line, right? Like there has to be some justification for other investors to like buy these tokens. And maybe then you can think about like what's undervalued, what's overvalued. Of course, in crypto, right, it's mostly narrative, but I think narratives matter less in a bear market, and I think the fundamentals and the earnings will matter more. Of course, there's like monetary premium, right? This mostly applies to like Bitcoin and Ether. You can't really use PE ratios for Bitcoin and Ether because you have to think of them as crypto monies. But when it comes to projects growing their earnings, and PE ratio goes up. So of course, using PE in crypto is like kind of dumb because how do you forecast earnings growth for a crypto project? And also, right, like it's like these companies, for example, GMX, they denominate their earnings in Ether and the Avalanche, right? Like these like altcoins, right? Like whatever. And these are volatile, so you can't really use PE ratios in that way. But I just think it's like a good model to have in terms of like what can actually lead to crypto prices going up. And the point I'm trying to make here is that, of course, I hold GMX because I think it's going to go to much higher prices. And, ultimately, of course, I want their earnings to grow over time. But in a bear market, I think it's kind of difficult to expect, their earnings to double or even triple, right? I just think that's kind of difficult. So if GMX were to surpass the $60 sell wall, right? I feel like every time GMX goes to $60, it just gets immediately sold into. So for GMX to eventually put in all-time highs, what has to happen is, of course, you want the earnings to go up, but I think the PE ratio, right, the multiple has to just get re-rated, right? People just has to be willing to pay more for GMX's earnings, and if GMX can increase their PE ratio from 10 to let's say 50, that can just lead GMX to 4 or 5x. So I'm kind of thinking about like what could allow the market to pay a higher multiple for GMX, and I think what could happen, right, is recently GMX has stopped emitting escrow GMX to GLP, right? So if you buy GLP, you earn transaction fees and you also received escrow GMX, but that ended in 2023, and this is the ultimate test, I think, for GMX, because I think DeFi has gotten bad rap because most of these DeFi projects, they are not sustainable businesses, and their costs are much higher than the revenues that they make, and therefore they're not actually generating any cash. And what I'm trying to argue here is that if GMX can stop emitting escrow GMX and their TVL for GLP can maintain, I think that's actually bullish, right? I don't even think that TVL has to grow. I think if TVL can sustain and there are like no GMX being emitted, then I think GMX can actually be re-rated because it's proof that GMX is a sustainable model, and a sustainable model doesn't really exist in crypto, right? There's 1% of projects in crypto are actually sustainable, and if that's the case, I think GMX can actually be re-rated and have like a PE ratio of like 30. I'm not sure, because I think narratives in 2023 is going to be around sustainable business models, and if the market views GMX as a sustainable model that generates cash and they don't have to emit tokens, then I think people will be willing to pay a higher multiple. I think the narrative around GMX is going to get much stronger. And that's kind of like the bull case I have for GMX, because it's really hard to imagine like volume and fees like tripling, right? Sometime in 2033. I mean, it definitely can, but I don't think that's that likely, at least not yet. I think it definitely can, right? If prices go higher and whatnot, but if you think about why people buy, right, and what price are people willing to pay for certain tokens, I think over time, if protocols like GMX, and this applies to like other protocols too, if they can prove Lindy without having to emit tokens and make a bunch of money, then I think the market is gonna like that and then assign a higher multiple. GMX, right, makes like $500,000 a day, which is like pretty interesting, right? Pretty cool. And GMX ETH ratio has been up only basically since inception. GMX was like up 2x in 2022, which was kind of crazy, right? It basically outperformed like all the risk assets, and I wish I owned more. And if GMX 2x'd in the most brutal market that we've seen so far, I mean, then why can't it be up more than 2x in 2023, right? I think it can actually put in like much higher valuations and ultimately hit like a multi-billion-dollar market cap someday. So while we're on this topic, I just want to talk about gains because I don't want to be like the super biased GMX maxi, because I'm not, right? I hold other stuff, and I also look at things like GNS. I talked about gains, I believe like 2-3 months ago, right, about the fundamentals, and they recently launched on Arbitrum, and so far, right, on January 18th, they actually put in like almost $330 million worth of volume for crypto and Forex, whereas on GMX, yesterday they put in a volume of like roughly, this is let's go to last month so we can get like more granular data. Not sure why it's not loading. There you go. Yeah. So January 18th, right? GMX didn't even put in like that much volume, and I guess like some of these data points are, like the cutoff of these dates are sometimes like kind of off, but January 17th, like GMX did like roughly almost $300 million in volume, whereas GNS put in like $330 million, right? So this is pretty interesting, and this is primarily driven by Arbitrum, right? So they were primarily like a Polygon project, but they expanded to Arbitrum, and now roughly 50% of the volume comes from Arbitrum. Actually, more than that, which I think is pretty impressive, and I think that's going to be pretty interesting. And I guess like the benefit of GNS is that it allows you to trade Forex, right? Like the British pound, Bitcoin, Ether, Euro, the Japanese yen, and of course GNS is risky because they use Chainlink oracles, and it introduces tail risks, etc. But obviously their Arbitrum launch is bullish, and this could be a growth driver, right? And if you think about all these random Arbitrum projects launching like delta neutral vaults using GLP, I'm not really a fan of those things. I don't really think it makes sense. But if people create products on top of if people create products on top of the gains vault, right, the DAI vault, maybe it can attract more TVL on Arbitrum, and then thus creating some reflexive valuation loop, right? Because I think the GMX to GNS ratio for the market cap is like 3-1. I wouldn't be surprised if it gets like 2-1. I still think GMX is a higher quality. I don't think GNS can ever flip GMX, at least like the way it is now. But it's definitely something to look at, right? So I don't want to be like a GMX maxi. I want to look at all sides. So 43 minutes in, hopefully you're not tired of my voice, but let's pivot to the NFT bull case. And I also wanted to talk about like the because I feel like we're all in crypto because the bull markets are super fun, and I'm kind of thinking about like what could catalyze the next on-chain bull market, and I have a thesis that it could be NFT. So let's talk about that, right? But let's talk about like the NFT as an asset class as a whole. And I understand that people subscribe to my channel because of DeFi, but I think it's inevitable that NFTs and DeFi will intersect, right? And the financialization of NFTs are inevitable. So I do think it makes sense to view NFTs as an asset class that DeFi will touch in 2033 and 2024. And I think it's kind of dumb to overlook, because if you're like an ETH bull, right, and you expect Ether to flip Bitcoin, do you think it's going to happen purely because of DeFi being big? I mean, sure, but I think it's more likely that Ether flips Bitcoin if DeFi and NFTs are growing exponentially. And NFTs are such a small asset class. I think the market cap of NFTs is like 10 to 15 billion, right? Which is like tiny. So, I think we're going to see a higher growth rate in the NFTs this year than for DeFi. So if you can find, I guess, like NFT financialization products, I think, there's going to be upside. But this is like a 2023 story, right? It's not like a January or February story, right? It's going to take time. It's going to take time. So let's talk about like how I think about NFTs. I'm like, I come from like a poker background, and my school of thought tends to be like on the more rational side, and it's really hard to rationalize some of these NFTs being worth so much. But I think one of the narratives that can actually catalyze NFTs is around this question. And this is an open question, like, what is the one thing that retail investors like you and I hate about crypto, right? Like what do we hate, right? What do we hate? And the answer is getting dumped on by VCs and those seed investors, right? Like, I hate buying tokens and then getting dumped by Alameda, right? I hate getting dumped on by seed investors that like just shield these random tokens, right? It's just like, damn it, like what am I put myself into? Of course, I think, now that we're in a bear, I think, people are much wiser about like, not buying these tokens. But, this is a sentiment that people use, right? This is like the argument people used to be super bearish, like ERC20s in general, right? Just tokens in general, right? It's like Avalanche, Solana, like L1 tokens, right? It's like, why would I want to buy those tokens when VCs are unlocking their tokens that they bought at 1 cent or something, right? It's like, why would I want to buy a VC's 50x? Why would I want to buy that, influencers 100x, right? It's like, which I think is totally reasonable. Even Bitcoin and Ether has this narrative. In the case of Bitcoin, right? Like what's going to happen to like the Mt. Gox coins? What's going to happen to GBTC? Bitcoin miners are dumping Bitcoin every single day. Ether, right, is deflationary. But like in March, right, post Shanghai, there's going to be Ether withdrawals, right? More Ether is going to hit supply. Like are going to get dumped on by Ether holders. So I think ERC20 tokens has this problem of like just being inflationary, right? And it's really hard to buy into things that are inflationary because you always have this idea that someone wealthier than you is going to dump on your head, which is always like a hard a psychological thing to have, right? We talk about the Solana ecosystem starter pack, right? Where CMS Holdings, Sino Global Capital, Alameda Research, like they seed invest everything and then they just like dump into FTX liquidity. It's kind of funny because like this was a meme in like 2021, and then I guess it kind of came into fruition, right? It's like, oh my god, like Serum is a scam. But the thing with NFTs is if you just purely view them from like a supply demand dynamic, it's kind of interesting if you kind of think about it this way. So if you think about the collections that's been around for over a year, right? So this only applies to like, collection that's been around. Most of them have like free mints or, like low cost mints, and, the supply is capped and they're reasonably distributed, right? Because if a project has a 10,000 NFT supply and they've been around for, let's say, a year, chances are, right, the NFT has switched hands like multiple times, and if they're still holding on to this NFT, and if the valuation, right, for some of these NFTs are at all-time highs, then you should expect that the holder base has pretty strong hands, right? Like their hands must be full of calluses or something. It must be really, really strong. Of course, there are issues of these NFT projects like airdropping new NFTs, and that kind of dilutes the value of NFTs. Of course, there's that element to it, but I think the dilution element for NFTs is much lower than the dilution element in the ERC20s. I think that's pretty hard to argue against. So for example, right, I own Pudgy Penguin. I talked about my Pudgy Penguins purchase, and they've been around since July of 2021. So they've been around for like a year and a half, and the fact that their Ether valuation is basically at its all-time highs. Of course, we've seen a correction. If you just think about like the relative supply demand dynamic that we've seen in Pudgy Penguins, like I'm not sure if like a rational person can look at this and be bearish NFTs. Of course, right? It's like, how do I justify paying like $6,000 on like a penguin JPEG? But you kind of have to find the right project. I actually bought this because I bought my Pudgy NFT, and I was like, wow, like, it's like, I love my penguin, right? It's like, this is my penguin and my penguin is me. So, for myself, right? It's like, I like the penguins, and like, I literally spent I literally bought the art like for the art, right? So I'm not going to sell my NFT, right? So like if the distribution for some of these NFT collections are going into stronger and stronger hands, and if confidence in the NFT markets can return somehow, I think you can make a case for NFTs to outperform some altcoins, right? And even Bitcoin and Ether. Just thinking about it rationally. So NFT statistics.eth, right? Punk9059. He's a great follow on Twitter, and he crafted this mid-cap PFP, right? A profile picture NFT index, and it includes things like pudgy penguins, sappy seals, crypto dickbutts, MFers, etc. And ever since, and this is looking at their Ether valuation. So we've seen like a crazy bull market in this mid-cap index since post FTX basically, and you kind of see this in like the pudgy penguins, right? And of course recently, right, pudgy penguins went from like 7 Ether to like 5 Ether, and this is like a pretty harsh pullback. But if you denominate this in US dollar terms, right, this index, it's basically in this pretty steady uptrend. And something I'm learning is like if Ether goes up, then people denominate their NFTs in like USD value, so people are and if they also want to catch like the Ether pump, then they're going to sell their NFTs into Ether so they can play the ETH pump. There's like a bunch of like different there's like so many factors that play into NFTs, so like and also like the fees are so high like with these marketplaces and like creator royalties. So I usually just tend to like just buy and hold, right, instead of like trying to flip these things. Of course I like provide liquidity on pseudo swap for certain collections, but generally like I think it's better to like collect than like trade. But going back to my original point, just if you ignore the fact that these are like just JPEGs and think about them as tokens with supply and demand, you can make a bull case for like why these things are in like bull trends, right? Like why not? And so like, this is a image from Kaleo, but I feel like there's sentiment that NFTs can't go up when Ether is going up. But if you look at the Q3 to Q4 bull market in 2021, right, like that's when we saw like the crazy NFT volume. So NFTs can go up in tandem with Ether, and I think it's a sector that we should look at. And this also goes into like my next thesis that I have, and also right, NFTs takes into account like roughly 22% of gas fees right now. So there's definitely some NFT activity. And by the way, like you should not be listening to me for NFT advice. I'm just simply sharing my observation and research. And like I mentioned, NFT market cap is like 10, 15. I mean, this is like not the best way to calculate it, right? Because you can't like look at the floor because there's like different rarities. But basically, it's a small asset class. And if like 5% of DeFi people like allocated capital to NFTs, and the NFT holder base is super strong, then chances are the floor prices will go up, right? It's just supply and demand. So this goes into the last topic of the day. This is a working thesis. It's a fun thesis, right? We always have to think about what could happen, because right now it's really difficult to imagine any type of bull market given the macro conditions, given Genesis, like whatever, right? But at some point the trend will shift, and I think it's important to think about what could create a trend shift. And this goes into my liquidity mining bubbles thesis, which is kind of what I specialize in, right? If you think about like my channel, but low conviction, something to ponder, working thesis. Like I said, like these are my thoughts as of January 19th. Maybe in like 2 weeks, I'm like, yeah, this was super dumb, right? I'm an idiot. But something to ponder about, because even if there's like a 5% probability that this happens, like if you're prepared for it, then chances are you can capitalize on it. And the thesis goes like this. So ever since the creation of DeFi and NFTs, so the post-COVID era, right, when people actually use the chain to like use DeFi, every on-chain bull market has been driven by some form of a liquidity mining catalyst. Right, something has to happen for on-chain to pick up. Right now, on-chain is picking up because people are speculating on NFTs and people are like buying like Lido and stuff, right? But that's not enough to catalyze a bull market, right? Something has to happen to incentivize thousands of people, hundreds of people to use the chain, pay 50 gas, right? Pay $50 to use the chain, and that is ultimately what causes like the next bull run. How sustainable is it? Like I'm not really making a prediction on like this creating like a 3-year bull market, but maybe like a 3-month bull market, right? I think it's definitely possible. And this is like following a drawdown. So, of course, like if we're in this uptrend, then, like everyone's using a chain. But following a drawdown, sentiment is bad. Something has to happen for people to want to use a chain again. And the thesis is around the fact that excitement on chain, when it comes to like crypto prices, I think, when prices go up, just something has to be happening, right? Like Bitcoin Ether just can't go up for no reason, right? Like if gas is like 5, like Ether is not going to go up. And following a drawdown, like there has to be some form of liquidity injection, because if people aren't getting some like incentive, no one's going to use the chain. And the liquidity mining bubbles thesis centers on the fact that if there is liquidity mining for a token where there is no valuation model, right? So if there are no valuation models for the token that's being incentivized for market participants, then people can justify any price for these tokens. The price can go up, therefore boosting the yield, and therefore bubbles can form because people become irrational. So let's talk about a few examples, and hopefully this can kind of tie in with the Blur airdrop that could happen. So June of 2020, like no one was using a chain, but Compound launched the Comp token and introduced liquidity mining, and therefore led DeFi summer to happen. Of course, at the now, right, in 2023, we know that Comp is, I don't know, like how do we value Comp, right? It's like a governance token, right? No one gets excited about the Compound token. However, 2.5 years ago, nobody knew how to value the Comp token, right? Like people viewed DeFi in 2020 as like a multi-trillion-dollar asset class, and people were like, oh my God, like the Comp token is going to revolutionize how people value governance tokens. It's going to democratize access to fundraising, capital raises, liquidity mining. Tokens are the future of finance, right? Like, these were the things that people were saying, like even I was saying this, right? Because we literally had no ways to like think about the valuation models. So when the Comp liquidity mining started, people were like, oh my God, Comp can 10x from here. Time to farm it, time to use a chain. And then this also led to people using other applications, right, for liquidity mining. It also led other teams to introduce tokens. And it was kind of like this reflexive loop where all it took was one project doing something new and novel, which catalyzed this on-chain bull market. And even Aave, right? I mean, I'm looking at the old coin, right, ETH Lend, before it got converted into Aave. But in June it was like 6 cents, and then it went to like 82 cents, right? So of course, right now we view Aave as a governance token, right? And no one gets that excited about it. But at the time, no one knew how to value it. So you can justify any valuation. So if we are in the scenario where people can justify any valuation for any token, and those tokens are being minted and being handed out to market participants, it's going to bring back on-chain activity. It's going to incentivize liquidity. It's going to incentivize people to allocate capital to the crypto markets. And that can actually create a reflexive loop where, bubbles form. And ultimately, right, that's why we are in crypto, because bubbles can form because crypto goes up a lot. Of course, we had DeFi summer. It deflated starting like roughly October, November-ish, and it got wrecked in December. But, once Bitcoin hit all-time highs, like Aave, it's just like 100, I mean, it didn't 100x, but it like went up a lot, right? Like it was kind of crazy. When people don't know how to value these tokens, bubbles can form. Part 2 of this example is, of course, the Matic, right? The bubble that happened. I think a lot of people joined my channel because of the Matic liquidity mining programs, but basically, right, Ethereum gas fees are super high. Like I don't want to use the chain. I'm priced out. So what do? I go to Matic, where gas fees are like 0.01 cents, and they're doing liquidity mining, and I'm being paid to use the chain. Okay, and some of these videos got like crazy amounts of views, right? And this worked because at the time, no one knew how to value these alt L1 tokens. In fact, if you think about like what people were saying back then, it's like people were pumping Solana because if Ether has the market cap of X dollars, and Solana has this many users, then why can't Solana be 20% of the market cap of Ether, right? And if Ether goes up, then Solana goes up like by a factor of 5 or something, right? Of course, now we know that, okay, like maybe Ether is king, and like what's the future of alt L1s, and people generally know how to value these things. But at the time, people didn't know how to value them, so the valuations went off the limits. And if people are being incentivized to use the chain with these tokens that the teams are minting at thin air, then it creates this irrational exuberance. This kickstarted degen farming season in Q1 and Q2 of 2021 when farmers entered Goose Finance forks. And Goose Finance was like the dumbest thing ever, right? It's like, for those that are not aware, it's like, it started on BSC where, for example, you can deposit, let's say, $10,000 into Goose Finance, and there's a 4% deposit fee, right? And 2% of the deposit fee goes to the team, and 2% of the deposit fee goes to buy back and burn the Goose token. And if you stake your USDC on this application, you get Goose tokens in return, right? It has zero utility, zero value, but it was basically like this money printer, and it was absolutely ridiculous. Of course, we look back on these tokens and we're like, yeah, like this deserves to be zero. But when you're living in these moments where like no one knows like what the hell is happening, like the valuations can really go off the charts. And in the Polygon days, we had all these Ponzonomic things that made 0 cents, but it worked, and like the majority of the people made money, which is kind of insane. And of course, right, like we had the DinoSwap craze, and please take me back to those times, right? DinoSwap was like the most PvE thing that I've ever done on my channel. I mean, I guess it kind of depends like how, like when you got in, but DinoSwap was amazing. And so liquidity money in the bull market, I guess, but we had like the dump in May of 2021 with like the Chinese miner FUD, Elon FUD, whatever, and everything nuked. Yeah, like I woke up and like my net worth was like had gone wrecked. And post the May crash, sentiment was really bad, right? People were saying it's over, right? Like we have to go down 90%, yada yada yada. But all it took was Bitcoin to put in like three weeks worth of God candles, and then Ava Labs, they were like, oh yeah, like this is our time. Let's introduce our version of liquidity mining, right? And that catalyzed Avalanche Rush season, Solana season, Phantom season, everything season. And it only worked because the market still didn't know how to value these L1 tokens, right? So these bubbles can only form if the market doesn't know how to value these tokens. That's something that I've learned in hindsight. And looking back, it's kind of dumb, right? It's like, why was I so excited about some of these tokens? But if you think about it, right, it's like, we got excited because there were no valuation models and the sky was the limit. Okay, that's why people get excited about things. Avalanche Rush. Of course, right now we know roughly how to value these DeFi governance tokens and the L1 tokens. So if some new L1 launched tomorrow and they introduce liquidity mining, it's not going to work, right? Because everyone knows how the game is played and everyone knows that it doesn't really work. But what's something that the market doesn't know how to value? And I think that's going to be with NFT marketplace tokens and also tokens that's going to be launched by NFT teams. Of course, we had Yuga drop the Ape token, and now the SEC is like, probing Yuga. So like, I don't even know like what the situation is there, right? In terms of regulation. But I don't think Yuga is that scared because like, even after the SEC probe, they introduced ape staking, right? So like, they're probably like not even scared of like the SEC, right? And recently the Department of Justice announced to the world like, we're gonna enforce serious actions, like international enforcement actions on the cryptocurrency industry. And everyone was like, oh my god, like, is it Binance? Is it Tether? But it turned out to be like Blitzslau or something, right? I kind of forgot like what the Russian exchange was called. So I mean, I'm not like, maybe this is a controversial opinion, but if the DOJ is like celebrating like enforcing actions on like some Russian exchange no one has heard of in 2023, like what are the odds that they're gonna clamp down on DeFi hard in 2023, right? I think they're really behind the curve, and I think some like crazy things can still happen in the crypto markets, even though it feels like it can't happen at this point. And the point I'm making here is like with the Blur airdrop. So this just got posted, right? They're gonna launch February 14th. I think Blur is a pretty good platform. I use it, right? I use, I was like farming their airdrop, and it's a pretty good platform. And I guess the question is, I think even after the Blur token drops, right, maybe that can catalyze some wealth effect where, some people make like a couple $1,000s and they reinvest those profits back into NFTs, right? And maybe, that can create a wealth effect. But I don't think the Blur team is dumb, right? It's backed by Paradigm, and like it's like they're pretty good with like how they're designing this thing, and I still think that there are going to be liquidity mining incentives even after Blur drops. So the question is, how do you value Blur, right? You can't really value it like a DEX token, because like what is like the total addressable market of NFTs? Like what is the growth potential of NFTs, right? It can be like much higher than like what we can imagine. And at the top of last cycle, right? I think OpenSea raised like 9 figures at a $32 billion valuation. So if people are going to benchmark Blur's valuation off of OpenSea's valuation, and people are like, why can't Blur get to 20% of OpenSea's peak valuation, right? Then people can justify an FDV of Blur at $6 billion, and that can create some crazy bubbles along the way. Chances are, like, I don't really know how Blur makes money because they don't really charge fees, so I'm not really sure what the point of the token is. But you know, if you think about my past examples of liquidity mining bubbles, we really don't have a way to like rationally value Blur. So if the token launches at an aggressive valuation, I think it probably deserves a valuation above a Luxware, right? And Luxware is trading at $100 million market cap with a $200 million FDV. So if you go off of this mental model, maybe there aren't any theoretical limits to the FDV outside of like, I don't know, like 10 billion, right? But you know, if Blur gets 10 billion FDV, then you know everyone's going to be singing Kumbaya, Hallelujah, you know, and like posting TikTok videos. So the point is, like, if the token is liquid and starts trading aggressively, like bullishly, I think that can actually create a bubble in the space, because if Blur does liquidity mining, incentivizing marketplace activity, where you know people get paid trading NFTs, buying NFTs, setting bids, you know, setting orders, then you know it's gonna allow people to make money, right? Get like some form of rebate, right? Compensation for using the chain. And if people are getting paid to like buy and sell NFTs, then chances are on-chain activity flows back, Ether does well, and if Ether does well because of NFTs, then maybe NFTs do well, and it kind of creates like this reflexive loop that can actually bring back on-chain activity. That's kind of like the mental model that I have. And of course there's like this Blur, oh yeah, you know, looks, I mean, yeah, whatever. Same can be said for NFT projects that launch tokens. So obviously like Yuga dropped the Ape token, but like what's stopping other NFT projects from dropping their own token as like a fundraising mechanism? Like for example, if Pudgy Penguins dropped a token sometime this year, like how do you value that, right? Like chances are there's going to be like no good model, right? Like chances are it's not going to be worth that much, but you know, in the short term, right? Like if there are buyers there, it's going to go up. You know, like most of them are going to be cash grabs, people are going to get wrecked. But if it can even sustain like a like 2 month, 3 month bull market, I think that's something to be aware of. And you know, even if this is like super dumb, and you know 6 months from now we look back on this video and you know it's like Taiki's stupid, you know, like we have to consider these things, right? We have to think about what could happen, because if you don't, then you're not going to be prepared. And if I've learned anything in crypto over the past couple of years, it's that bubbles can only form when people don't know how to value these things. And once people start understanding how to value these things, then things come back to earth. And I think, you know, the next bubble that can form is gonna either be in these NFT marketplace tokens or like these NFT tokens, potentially, because yeah, and also like, you know, for like people like DeFi and like crypto and stuff, it's like, it's, if you want to like, you know, bet on the growth of the NFT market, like what do you do, right? It's like, do you buy Ether because that's like a bet on NFTs? I mean, I guess you could, but it's not like a direct bet. Do you buy Coinbase for their Coinbase NFT marketplace? Not really, right? Because no one uses it. You can't really trade equity for the OpenSea token. I mean, if OpenSea had a token, right, like that should be worth like multi-billion dollars, right? Like totally. But chances are they're not going to have a token. Like they might even IPO at some point in the future. So, you know, if we're in that scenario, then maybe things like Blur can actually, you know, create like some irrational exuberance, enter a bubble, and then that trickles down into the NFT segment. So that's my general thesis. And I guess like, I don't really know how important this is going to be, but you know, Daigaku, they're going to run like a Super Bowl ad that's going to allow people to mint NFTs for free. And you know, they raised $200 million, and if they're going to do this, then like maybe they have a plan, right? Maybe that's going to bring retail activity back, because as much as I love DeFi, right, it's like the average retail, like normal person, like they're not going to buy FXS, right? It's like understanding FXS takes too long. But you know, if Bitcoin is going up and Ether is going up, and then you know NFTs are starting to go up, then I think you know the friction to buy NFTs is like much lower than buying things like FXS and CBX and GMX, right? Of course. And that can also create like some crazy multiple in terms of narrative, right? And we talked about why people buy tokens, right? It's like, of course, like there's like, you know, you can use some form of a P ratio, but it's, you know, crypto is driven on narrative and speculation. And if the narrative is strong enough, then we can, you know, sing hallelujah and kumbaya. So yeah, that's about it for the end of the video. It's a pretty long video, all at timestamps, so it's going to be less of a chore. But hopefully this was an interesting video. Let me know what your thoughts are. You know, since we're still in a bear market, I want to spend like, you know, less time like hyping tokens up, right? Because it doesn't really benefit anyone. I think I'd rather talk about like concepts that people can apply for like future narratives and like how people invest, I guess, in the future. But who knows, like maybe this helps. Yeah, hopefully this was helpful. So thank you guys for watching. Link to the premium Discord is in the description below. See you guys later. And yeah, see you next month for the next update for DeFi and NFTs. Bye-bye.